Hey there, and welcome back to another Canadian news recap here on Bald Prairie Real Estate. My name is Matthew Pfeifer from Real Estate in Regina, and that's my trusted assistant. This is a segment where we go through the most interesting news articles that I found this past week about the Canadian real estate market and give you my thoughts on it. I've been saying for a long time on this channel now that in Canada, we don't have enough homes and we don't build enough homes to keep up with population growth and demand. Well, Stats Canada is out with a new report, and it's been running wild in the news that disagrees strongly with that. We're also going to be looking at what's going on with rent prices in Canada and where you can buy a house for under $200,000. And I've got a few other great articles I think you're going to like, but as always, let's start off with another terrible joke. What do you call an ancient Egyptian? An old Giza. If you have a terrible joke that I can use in a future episode, put in the comments below. Let's get into this week's real estate news. This first article is looking at housing starts, and according to CMHC, once again, housing starts are down. This shouldn't be surprising at all. We've seen this now for a couple of months in a row. As interest rates go up, fewer and fewer developers start building homes. And this is, of course, because one of the biggest components to looking at whether a project is going to get off the ground or not is how much it's going to cost to actually build that project. It's a huge part of that pro forma that those developers are going to do. And if they see the cost of borrowing money continue to increase, or it's higher than what they think they can sell these units for after it's all said and done, they're just not going to build these homes. And we've seen the cost of materials skyrocket. Now the cost of borrowing money skyrockets. So many projects are just no longer feasible. We've seen a large number of projects being put on hold or entirely shelved. We have this shortage of houses, at least that's what I've been saying. Of course, we're talking about how Stats Canada disagrees with that in just a minute. But unless we see the cost of borrowing and the cost of materials decrease, or it's subsidized somehow, we're going to see fewer and fewer homes being built in Canada. This next article here is looking at immigration growth in Canada, specifically the number of permanent residents in the first quarter of this year. This was a record 145,000 new permanent residents in just the first quarter of this year. That's just the first couple of months here. That puts Canada on pace to welcome 600,000 new permanent residents in the year. That would smash last year's record of about 500,000 new Canadians. And of course, the government had projected around 450,000 for this year. That was what they were aiming for. Prior to 2015, if you look at the previous 20 years prior to that, immigration was around 200 to 250,000 new Canadians per year. Since 2015, that has been ramping up massively. And we're seeing, especially the last couple of years, how much of an impact that has on the rental market. Vacancy rates are going down and the cost of rent is going up significantly. We'll be talking about cost of rent here in just a second. That is also going to have an impact on Canada's real estate market in years to come. It's very common that many new Canadians will come to Canada. They will rent for 3 to 5 years or so till they get established, they've got Canadian credit, and then often they're looking to purchase. So right now we're seeing this immigration surge putting a pressure on the rental market, and that will start putting pressure on the resale, the purchase market in coming years as these new Canadians get established and look to buy their first home and make Canada that permanent home that they've been looking for. The big shock announcement last week was the Bank of Canada raising interest rates. This, of course, was big news last week, and it was something I should have talked about in a news recap last week, but I didn't get a video last week because I've been absolutely swamped here, so I'm a little behind. I'm sorry, guys. Trying to catch up here, but this was something that, for the most part, took the market by surprise. A lot of people were expecting rate increases in July, not here in June. If you look at the way the bond market reacted, that was definitely something that they didn't expect there, and the vast majority of experts were not expecting rate increases. I'd put up a poll about a week before this, as I always do before these rate announcements, and about 25% of the respondents thought the Bank of Canada wouldn't raise rates. 25% thought they would raise them 25 basis points. So for those of you that had that answer, you guys absolutely nailed it. Now, a 25 basis point hike in itself doesn't have a significant material impact on the resale market or on the residential real estate market in Canada, but it has a significant psychological impact, especially when you combine it with the Bank of Canada essentially coming out saying that they're going to start raising rates or continue to raise rates some more. This has a significant psychological impact on the market. We saw this last year when the Bank of Canada started raising rates right away. A lot of buyers got spooked and sat on the sideline. Of course, huge drop in sales. We saw prices drop as well with that. Actually, it was Bank of Montreal put out a recent survey where something like 70% of those looking to buy a house in Canada were putting their plans on hold, waiting for interest rates to come down. And that was before this rate hike was announced. And I expect that this is going to put some more buyers on the sidelines because they're going to be spooked and saying, I'm going to hold off here a little bit and see what's happening. We saw this last year, and then as the bank has started slowing down those rate increases and then ultimately paused them for a while, we saw a lot of buyers come back to the market. A lot of home sales happen in that time. I wouldn't be surprised if something similar like that repeats itself. This next article here is Canada's financial regulator, OSFI, firing basically a warning shot at banks. So this is Canada's their mortgage regulator, essentially telling the banks, deal with extended amortizations. And specifically, those are, of course, on static variables that have seen their effective amortization extend out to 30, 40 years. This has been something that I think has been really poorly reported in the media and online. A lot of people saying everybody has 30 and 40 year mortgages in Canada. No, that's not the case at all. If you go to buy a house in Canada and you get a mortgage, you will not have the option for a 30, 40 year, well, technically 30 year mortgage, but a 40 plus year mortgage. If you put down less than 20%, your only option or longest option is 25 years. If you put down 20% or more, you can extend to a 30-year mortgage. That's the rules say. Nobody's getting a mortgage, a new mortgage, they have 40 years. What we are seeing though is those on static variables, that is those variable mortgage holders that have a monthly payment that doesn't change, just the percentage of the principal versus interest fluctuates with interest rate changes. And now that we've seen interest rates go up significantly, in many cases, these static variables now are entirely interest, or in some cases, more interest than the total monthly payment. So what's happening is that effective amortization, because they're adding essentially debt onto the mortgage, is getting extended out. So effective amortization, though, is very different than contract amortization. So when rates go up, these payments don't change. That means less going to principal, more going to interest. So effectively, it's going to take them longer to pay that mortgage off. The same happens in reverse when interest rates go down. What happens though is when these mortgage holders go to renew their mortgage, they must reset back to their original contracted amortization schedule. So at the end of the day, they still have to pay these mortgages off over that contract period, so 25 or 30 years. They have a choice that they're going to have to make when they come up for renewal. They have to make a lump sum payment to catch back up, or they're hoping that interest rates come down so they can catch back up just because interest rates have gone down. And that is why I think OSFI is trying to get on the banks right now, because this is a problem that is brewing. It's going to be a few years before we see this in the market. But if we have a situation where interest rates don't come down and these homeowners aren't able to make lump sum payments, they're going to be in a lot of trouble. And that's why I think OSFI is pushing the banks to deal with this. I have a little bit of a hunch, no inside knowledge, that you may see some regulatory changes put forward by OSFI specifically to handle this, whether they're saying this can't happen in the future, or they come down very heavy-handedly and make the banks get these in line much quicker. Now we've got the monthly Rentals.ca rent report. Year over year, nationally, rent is up 6.5%. I'll link this article along with all the other ones in the description below so you can dig through it yourself. $2,000 a month, that is the average combined monthly rent. We'll break it out by different subtypes. $1,900 a month for apartments, $2,200 a month for condos, $2,300 a month for townhouses on average. Now we are seeing the pace of rent increases slow down. Still up 6.5% year over year, but this was the smallest year over year increase since December of 2021. Now, when I was digging through this, it was interesting looking at the chart. There are more cities than I saw the previous month with negative year over year, so prices declined. And one of the notables was Quebec City that saw a negative 9% for two-bedroom condos, two-bedroom apartments in Quebec City. And on the flip side, Red Deer, Alberta saw a 25% increase in monthly rent. The Calgary rent prices, those have continued to climb up, and then of course is having Calgary climb up that ladder of becoming more and more expensive of a place to rent. Calgary for a long time had been considered pretty affordable, and they're climbing that ladder, becoming less affordable. But across the board, it continues to be more and more expensive to rent a home in Canada. This was a great article from Point Two Homes. Where can you find houses for under $200,000? Now they ranked here 50 cities, the 35 most expensive are all in Ontario and BC, and none of them had homes where they were showing for sale under $200,000 at the time that Point Two Homes went through and looked at this. Of the remaining 15 cities that had homes that were for sale below $200,000, it was less than 1% of all homes all available for sale. Now, if you look at places with the highest share of homes under $200,000 for sale, Cape Breton, New Brunswick leads the charge at 45%. Then you've got St. John, New Brunswick, Regina, Saskatchewan, Winnipeg, Edmonton, Saskatoon, and a few others. I did a quick search here just for Regina and Saskatoon. 30% of all homes available in Regina were priced under $200,000 and 16% respectively in Saskatoon. It's been the case for a long time now, though, that if you're looking for cheaper, more affordable places to buy a house in Canada, the Prairies and the Maritimes are where you find that. I'm slowly working on a video right now comparing average household income to home prices to find the most affordable places to buy a house in Canada. So make sure you get subscribed so you don't miss that video. And if you are thinking about buying a house and you need a great real estate agent, in the description of this video, along with all the sources for this material, is a link to my calendar where you can book me in for a buyer's consultation. I'll figure out what you're looking for in a real estate agent, and get you set up with the best agent in your market. Now we come to the article where Stats Canada says that housing stock grew more than population. This is something I'm seeing published all over the place, whether it's on Twitter or on the internet. People are saying, see, it is not a supply problem in Canada. It's those greedy speculators and landlords buying up all the inventories so regular people can't buy houses. Now, of course, if you go through and read this report and not just read the headlines or the articles talking about the report, there's a whole lot of very important information and context. First off, this only covers 2019 to 2021. That's a very small number of years, and it's some very important years. But let's go through kind of the headline stats here. So they show that population in Toronto increased 1.3%, while housing stock increased 3.5%. In Vancouver, 2.1% population increase and a 3.6% increase in the housing stock. Of course, again, three years in particular here that are very important. The report also specifically says it did not look into whether there was a pre-existing shortage of homes in Canada or not. So even if we were short millions and millions of homes, which CMHC has been saying for a while now, this report didn't look into that. And because it's 2019 to 2021, that's important because, of course, 2020 and 2021 are 2 years that we saw some of the smallest population increases in Canada because, of course, of the pandemic. 2020, virtually no population increase, and 2021 saw a very small population increase in Canada, of course, in those two cities. When it comes to building homes, these are planned out years in advance, 5 or 10 years prior to when people can actually take possession of these homes. So these projects that were finished in this 2019 to 2021 that increased the housing stock were planned years before this. They were not accounting for those 2 years that we saw a drop off in population increase. Of course, now 2022 and looking like 2023, we're seeing record immigration levels. That's going to pull a lot of strain on it. So yes, specifically these 3 years, we saw housing stock increase faster than population. But this is really the anomaly, not the norm here. So you may see this put out there as see proof. Housing stock is definitely increasing faster than demand. It's not. And that's why we're seeing all over the place articles saying exactly the opposite. This one just grabbed the headlines because they use some very specific years and it's been going like wildfire right now. Now you should go check out this right here, which is my most recent monthly Canadian real estate market update. In this past month, I actually took out the 2020 data because of how much it skewed the results for the 5-year average. And it's really interesting to see what happened there. If you love this video, please give this video a like for me, help spread this video, hit subscribe if you love learning about Canadian real estate, leave some comments below so we can discuss things in the comment section below. And as always, thank you guys very much for watching.